You talked about, yes, the governor not increasing the inflation estimate, even though he increased the GDP estimate for FY25. But he did talk about two, specific issue. One was that it was a word of caution to the NBFCs as such, because they talked about the entities charging fees for small value loans. So that's something to watch out for, because a lot of microfinance companies and the NBFCs will be in focus on account of that. And secondly, there was a word regarding the credit deposit growth rate, which warrants a rethink as per the RBI. How important these two statements were, Mr. Gandhi, for you?
Of course, consumer protection has been in the RBI has been paying more attention on that in recent months. Especially the disclosure relating to the terms and conditions of the most important terms and conditions of the credit that is being offered by the credit institutions. And that is the first step which are already taken. Now, next step will be where the banks and the other institutions where they are not transparent enough, and if they are crossing certain limits, then regulatory action should be following. That's the caution which Governor has implied when he said like that. So that is again, as I said, consumer protectionism is definitely within the ambit or the mandate of the Reserve Bank of India, and it has started paying more close attention on that, especially at the lower end, because at the lower end, the small value loans, if the rates are more, then it is affecting the bottom of the credit institution, especially microfinance and all. So that is why the caution has come in time. The second question that you asked relating to credit deposit ratio, yes, that is because for the past 2 years, deposit growth has been a little tardy in the banking system, whereas credit growth has been much higher compared to the previous years. So that the narrowing the gap between credit growth and deposit growth. So that in that process, the banks typically have kind of increased their incremental credit deposit ratio. That is not good in long term for the safety of the robustness of the balance sheet of the banks. So that is where I would think that, because of course SLR is only 18%, but the HQLA requirement definitely requires the banks to have additional portfolio in terms of investment in high quality securities like government bonds and others. So that would automatically mean that their advances should be at a moderated level. That's what is indirect caution. That's my quick read.